Hello, everybody, and thanks for joining us today. Today we have Troy Clements and Erin Slattery from the Campbell County Assessor's Office, Campbell County, Wyoming Assessor's Office. And we're gonna let them talk a little bit about their jobs today. I kind of hope that some of our participants interact a little bit and ask questions or share concerns or add comments, whatever you feel necessary. On the Zoom, if some of you haven't done it, you could leave some notes in the chat, or there's a Q&A down at the bottom, so we're not interrupting the speakers throughout the presentation. But we can stop the presentation if you want to cover something quickly, and use the Q&A buttons at the same time. I do expect to cover all questions and answers at the end. So if we don't cover something during the presentation, we'll double back and cover it at the end for sure. I don't want anybody leaving here thinking that they didn't get their questions or concerns answered, or interject any conversation. So anyway, like I said, I'm Jason Walker. I've been a realtor since 2010, licensed realtor anyway, and been selling real estate ever since. At the county doing the assessor role.
Sorry, you cut out. What was that?
I was asking Troy to introduce himself and give a little history on his background and how long he's been the county assessor.
All right, thanks, Jason. We appreciate the opportunity to visit with everybody today and present some information that kind of gives you an idea of what we do and why we do it and how we do it. Of course, Troy Clements, County Assessor. I've been here in the office going on my 25th year, 17th year as the County Assessor. My predecessor, Jerry Schatzer, actually got me started in the business in early 2000s. So I've just learned a lot since then. Of course, stepped into his place when he retired at the end of 2006, ran for office, and I've ran 5 times since then, and thankfully been able to stay in office. So anyways, I do have my chief appraiser, Erin Slattery, with me today. She's been here for a number of years as well. She put together this presentation, and so she's going to walk you through most of this, but either one of us are happy to answer questions, concerns, anything throughout the process. So just let us know, and we're happy to stop and go through that question session. So thanks so much, Jason.
Hey, Troy, one thing before she gets started, you talked about you run for term 5 times. You're the only one in your office that has to run for election. Is that correct?
That is correct, yes. Just elected officials. Yep.
Yeah, okay. Thank you. Erin, go ahead.
All right, everyone. Thank you for joining us. I'm Erin Slattery. I've been in the office almost 17 years now. I was just put in this position last spring as chief appraiser, with all of that training that I have had in classroom, continuing ed hours as well. It is, something that we would like to present to you guys, and questions and answers are greatly appreciated. And as we go through, please raise your hand. Just don't be shy. Ask us what you need to, and we'll try and answer you to the best of our knowledge. And if we don't have the answer right now, we'll try and get it to you.
Awesome. And before you get started, I'm going to show this real quick. Troy and Erin sent this to me ahead of time, the presentation. I got it printed off, so anybody that's watching, if you want a printed version of this, I'm more than happy to make you a book. Just let me know, and we'll hook up with you and get that sent to you. So anyway, take her away.
All right. There are a few things in there that I did not double check my work on dates, but it's all the same information. So anything that we are providing, that has not changed. It's mostly just changings of the dates on the presentation. So I will go ahead and start to share my screen with the slideshow. We are the Campbell County Assessor's Office. We are located in the courthouse on Gillette Avenue. There are several county offices in this courthouse, and we are on the main floor in the courthouse. And I tried to do the slideshow, and it went to my other screen. It wouldn't work, so I apologize. This is a little little offbeat here, but our assessor duties are to follow Wyoming statutes that state that all property except agricultural land will be valued at its fair market value. Fair market value is defined by the Wyoming State Statute 39-11-101, as is the fair market value means the amount of cash, terms reasonably equivalent to cash, sorry, a well-informed buyer is justified in paying for a property, and a well-informed seller is justified in accepting, assuming neither party to the transaction is acting under compulsion, and assuming the property has been offered in the open market for a reasonable time. Those terms are ones that we have to follow when we are looking at fair market value in our properties. There are several aspects that go into it, and those are part of this presentation as well. But overall, what it comes down to is when we look at the year prior sales, as well as the valuation of the property with the land and the buildings, we're coming up with that fair market value. And again, some more statutes that all taxable property will be annually listed, valued, and assessed for taxation in the county which it is located in the name of the owner of the property as of January 1st. As you guys know, when property sells during the year, we can only change that property ownership as of January 1st. So any sales that happen after January 1st, they are in our system. We do continue to gather documents to make those transitions of the ownership changes, but they are not put into our system until the next tax year.
Erin, I want to stop you there for a second.
Sure.
First, can you go back and, for everybody watching, can you define what you guys look for as taxable, or excuse me, agriculture land, what that definition is for you guys? And then the second thing, describe why January 1st, why is January 1st the cutoff for every year? Like, if you could dive into that rabbit hole a little bit.
So, Jason, the ag land is actually based off of production, hay, grains, that sort of thing, grazing, whatever may be going on the actual property itself and the use. And so we get information from the Department of Revenue each year that gives us basically a parameter on the values that we need to stay within when we're valuing those properties based on what county you're in, if there's a lot of hay ground, irrigation, just grazing. And so it varies from county to county, obviously, but so we use a 5-year weighted average on that production, and that's what gives us our value for the ag land each year, depending on what class you fall within.
So it's not based on an acreage size, or, yeah, I guess the acreage is kind of the big comments I see on my side once in a while is, I got 40 acres, but am I agriculture?
Okay, so that's a good question. If you're in a subdivision, per statutes, you have to be 35 acres or more is the first qualifier for ag. The second thing we look at is what are you using that land for? Are you running cattle, selling calves? Are you running brood mares, selling colts, goats? What are you doing on that land? And that's something that we take a look at and determine if that property qualifies for an ag classification each year. I have those individuals bring in receipts to me where they have sold whatever in the fall, hay, calves, colts, whatever it may be, and that would keep them in that ag land qualification. As far as size goes, once you get out of a subdivision, I've got people that have 10, 20 acres that hay it or run a couple cows each year that actually qualify. So that only one stipulation for being within a subdivision is really all that I guess limits people when it comes to getting that ag classification or not.
That's provides a lot of information. And I think I'll just interject on the resale side here a second. We see a lot of people pushing for, non-subdivision properties and no zoning, and this would fall into part of their reasoning. But the other reason I bring it up too is like we see more and more people pushing to the urban agriculture side, which in my opinion, from Washington DC down to us locally in every county and every state in the union, urban agriculture seems to be getting more and more defined every year, where we didn't have that 20 years ago or even 10 years ago.
Yeah, I certainly wouldn't disagree with that. The one thing that we will take a look at is, of course, the zoning, but that doesn't necessarily indicate how we're going to assess that land. We might have somebody that's zoned commercial or industrial, but if they're actually grazing cattle on there and that's all they're doing, and they turn in receipts to me, we'll put it in as ag.
Gotcha. Well, that's good to know. That's a good golden nugget right there. Thank
So
you.
as of the January 1st date, it's statutory because the Department of Revenue, it's like a fiscal year. So since it's not, we have other counties that we deal with or know about in other states, and they may have a fiscal year of July 1 to July 1. State of Wyoming made theirs January 1st to December 31st. So it's just following what we call type of a fiscal year, because we are basing everything off of the sales that happened in the year prior. So our cutoff is January 1st.
Sure. Well, thanks for sharing that, because I've had that. I bet if that ranks in the top 3 questions at a closing table, why January 1? And I never knew that personally.
Yeah, and we kind of have a little bit more into the presentation here too about new owner and the new owner tab. So we'll get to that here in just a little bit as well, because that is also helpful information with when we are entering our new owners and we have the data that we've entered, it will reflect on the website with the new owner, as long as everything is correct on the deed and on the statement of consideration, and we've processed it. If there's any problems and we've had to hold it, or it's some type of split from a bigger parcel, that will not be reflected online. We have to go through a longer process before we change ownership.
Sure. Thank you.
You're welcome. So the county assessor in each individual county shall value and assess all property specified in another statute in accordance with these rules. The department shall monitor the work in progress in the office of each county assessor to determine whether the procedures and formulas promulgated by the department are being observed and applied. This just means that the Department of Revenue, they watch us. They look at our valuations, they look at our numbers, they look at our ratios, they do analysis. Are we in compliance? Are we doing what we need to be doing to have our values at fair market value? The county assessor's office shall physically inspect all real properties within their jurisdiction, which would be Campbell County, at least once every 6 years in order to assure the property characteristics data is correct. We are on a rotation of 4 years right now instead of 6 because it had fit our numbers better. And if we had properties that we had visited and we were within our number range of how many properties that we need to assess or review every year, they would let us know if we weren't doing our numbers. We do try to get, sorry, I'm also going into the Q&A here, but we'll do that at the end, sorry. Valuation starts with the replacement cost new less depreciation. Building cost inflation is on average, that everyone is very well aware of up to 20 to 25%, if not more. We have seen some lower and higher depending on the quality and condition of the property. If you have within those rams of numbers that you've seen over the last 2 to 3 years, that's where it's coming from. How much is it going to cost to replace those structures? A home, an outbuilding, a commercial building, whatever it might be, we are assessing, per se, the same type of level as the insurance companies with replacement cost new, less depreciation. Do you want me to see what the question is, Jason, or keep going?
No, actually, let's take that question. That's from Anthony and Danny. Let's take that because it goes back on the agriculture stuff.
It says, as new residents to the state of Wyoming, what is the benefit or downside to having the agricultural tag?
I'll weigh into that a little bit. So residential land, if you're not in ag, can vary, like Erin mentioned, depending on what part of the county you're in, what kind of sales we're seeing. So you might see an acre come in at anywhere to from $2,000 to say $5,000 or $6,000 per acre on valuation. So therefore, you're looking at a tax bill of $1,000 to $2,000 versus ag land. If you're in at third-class grazing, and you have, say, 120 acres, you're looking at about $60 a year in taxes versus, say, $1,500. So there's a huge benefit if you qualify and fall within those guidelines of meeting the ag classification. So it's well worth your time to come in, visit with us, check it out. If you're running animals, we'll certainly take a look and see what you're doing. Take a look at your receipts and make sure you qualify. And you also fill out an affidavit at that time stating that, hey, this is what we're doing. You sign and date it, and we keep those in a file on hand here. In case we get audited, that sort of thing, the state wants to know what you're doing, why you're doing it, and they can pick any of that at any time. So we always document that stuff so we have it on hand.
Thank you for that question.
I think that's the same one.
No, okay.
Yep. All right. So, in that objective, our job is to arrive at market value for properties within Campbell County in an equitable and uniform manner. We use mass appraisal to accomplish this objective. And so with this, the appraisal techniques, which may be used by the county assessor, include the following 3 approaches to value. We use the sales approach, cost approach, and the income approach. The 3 approaches to value are similar to ones that many of you have probably seen. The sales comparison is our major one that we use. The approach is an appropriate method of valuation when there are adequate numbers of arm-length transaction sales and the properties subject to such sales are similar to the property being valued. This comparison is more frequently used at establishing the fair market value. With the sales comparison approach, we'll go into it here a little bit more too of, why we use that and how many sales we need to establish a good, valid sale. The cost approach is a method also of estimating value by summing the land value with the depreciated value of improvements. This approach is acceptable when sales data is unavailable. We typically shy away from this if we have enough information on our sales comparison approach. The cost approach is book-oriented with Marshall and Swift, and with being mass appraisers, and we are assessing multiple properties in one neighborhood, you will see that having the cost approach will make your valuation higher. The income approach is a method of estimating the value of property by converting anticipated benefits to be derived from ownership of the property into a value estimate as it's reflected by the yield capitalization methodology. And how we use this is when we're looking at low-income apartments, we can actually review their income and expense financials along with vacancy rates to see if they would apply for any low-income housing tax credits. That it is a little bit more information that it has to be provided in order for us to come to that valuation that would be fair.
Erin, who would you be getting that information from on the income approach? Can you cover that again?
Typically when they contact us, we are asking them, it depends if they're the agent or the tax consultant of the companies. We have had some individuals bring in their own, but it's usually a tax consultant or an agent that gets it from their tax consultants that would send it in. Obviously, it's confidential information. We don't provide that to anything other than us to see if they would qualify with the capitalization rate of that low-income housing tax credit.
Huh, interesting. The other thing I'm going to add to this for everybody watching, you mentioned the Marshall and Swift book. I'm not going to speak for every appraiser in the world around here, but a good lot of them, like when they're valuing their house, when you do a buy or sell, or some other real estate, they actually refer back to the Marshall and Swift book as well. It seems to be like the Bible of the appraisal industry. So that way, for those of you that don't know the industry, they are using apples to apple type information.
And actually, in the state of Wyoming, we're required to use that manual when valuing structures and property.
It is a nationally recognized book, and we have it as our Bible per se.
Yeah.
And we do have to follow it. It is something that they set forth with our guidelines of how to appraise a specific building. When it comes to the style characteristics, that of course is our judgment. And if there is anything that is different from what we have, that's when we typically reach out to the taxpayer, you as realtors, if there is a problem with the listing, if we have incorrect information, where did we get it? How did we get it? Did we estimate? Because we weren't able to get inside. That's where you guys come into play when you help us get the correct information so we can assess it accordingly.
Well, what's fun about the Marshall and Swift book, them folks that publish that book, they update it every quarter. So, I mean, they got the hustle on every year throughout the year.
Yes. Yeah, we have certain updates that we have to follow by certain dates just because of the Department of Revenue rules. But they set forth, we get the updates, and if it's changed drastically, they will let us know what to use and when to use the update. Otherwise, it is updated once a year, just like our January 1st date.
Mm-hmm.
So we're going to get into the next topic. statement of consideration. This is a big, conversation of why do we get these? These are a huge part of how do we know that this is a valid or invalid sale? We can't just adjust the valuation on the SOC by itself. I mean, we have a complex job of annually determining the fair market value of all properties. And we have to know the intent of the property. What is the use? Is it going to be used as residential? Is it going to be used as ag? Was it residential? Is it now commercial? So on and so forth. The sales information is annualized to develop the adjustments to bring the property to the current market value. Everything that's on there, it's very crucial with our analysis along with the property characteristics to make sure that we have accuracy. We do first contact the buyer because the buyer will know the property as it is right now. Did it change overnight? Did that seller, leave things, for the buyer to change with painting, with move-in ready, or was it destroyed? All those things that we don't know because we do not physically visit them as they sell. This information is extremely helpful to us as well as you for the future of that property. There might be things on there that you may feel are confidential and you don't want other people to know. Nobody sees these except for our office, and between 3 people in this office, they're 100% confidential. When you fill those out, it's information that we use for our analysis. It's information to find out, is that sale valid or invalid? So when we go into our valid or invalid, is it a typical financing? Was it sold on the open market? Was it an arm's length transaction? In all good faith, was that a good sale? If it's invalid, was it between related parties and individuals? Is there a transaction involving more than one parcel? Was it a foreclosure or a short sale? That's huge because we need to know, was that property under distress? Did they have to get rid of it under knowing that they're going to do a shorter version of a sale to get rid of it before they're in distress and can't get rid of it? The sales that involve non-typical financing, such as the contracts for deeds. And then we also asked, was there any personal property included in the sale? Furniture, hot tubs, cranes, hoists, commercial part of it, you'd have your inventory, your fees, your fixtures. This is all because did that sales price include the land only, the buildings, or anything extra?
Can you jump into why contract for deed would classify as a bad sale?
It's looked at as upon a owner financing. Are they doing this because it's not listed on the open market, and is it within reason? If I feel like that sale is within reason of the sales price of the open market, I can make it a valid sale. We do have to find out those questions and answers, though, when we call on those sales to make sure, is it typical? Was it, again, something that the owner is under distress, the seller, but yet the buyer doesn't have good financing at the moment, so they're going to do a contract for deed. But we do look at them.
Yeah, I just see it like a seller is not going to give much of a break on interest compared to market interest rates from banks, from the open market.
Right.
And
Yep, I think Yep.
the buyer's credibility really has nothing to do with performance. Like you could have there's just some people that don't have a credit score, but they're going to be great borrowers, and they're assets to the community and the property they're buying. That's why that one kind of strikes me a little different. Like, why?
Yeah, and that's why we do call. And if we don't get a lot of the information that we would like, we are again looking at that sales price. Is it within reason of what the remainder of the neighborhood or the remainder of the area is doing in sales? Do we
Sure.
have enough sales already minus that contract for deed, or do we really need that sale to be a part of our valuation to come up with those statistics?
Thank you.
You're welcome. Because that gets us into the next sales analysis when we get into it. We need 5 valid sales in order to apply what we call a neighborhood adjustment. We may use up to 3 years of sales to reach this quota. We use previous year's sales for the entire analysis. And that just means how we have a specific home put into a specific neighborhood. And then if we don't have enough valid sales in that neighborhood, I have to reach out to other neighborhoods in the county. Do I have other sales to look forward to that are the characteristics? Is it an older home area? Is it a newer home area? Is there a lot of vacant land in this area? Commercial sales, is it retail? Is it storage warehouse? We have to bounce back and forth to reach that analysis. It's 5 makes it valid, and then everything after that, we have to dig deeper. Land economic area is called an LEA. We're established is existing for residential area, commercial area, industrial areas. We have to keep them separate in how we assess them. And in our neighborhood, market adjustments are made. That's based off of the number of sales, how much did the market go up, how much did the market come down, and we have to make those every year and look at that entire neighborhood every year to make sure we're within compliance with the Department of Revenue. We have to be within 5 to 10% of 100% of the value. And that is based off of those building costs and then the year prior sales. So your land value and your improvement value is combined total for your value, which is the fair market value. That is what's mailed to the taxpayer on the notice of assessment that gets mailed out in April. So go ahead.
All those 1 through 4 on that slide, is that, so like 5 valid sales, is that governed by the state as well, or is that a local?
That is governed by the Department of Revenue, by the state of Wyoming, Board of Equalization.
So 1 through 4 basically is all state statute.
Yes. I can look at neighborhoods that don't have enough sales, and if we need to move the neighborhood, if there is an area that had, let's say, 5 to 10 years, just absolutely no sales in it at all, we are continuously wanting to make sure that we have that neighborhood in where it needs to be. Is there somewhere else it can go into? Specifically, if you look at original Old Town here, downtown, that's a hard area to put in with, per se, Antelope Valley. You can't do that. You got to keep your areas and your neighborhoods within reason of how long they've been there, how big are the lots, how old are the homes. You have to keep analyzing all of that information to make sure, because then the Department of Revenue will tell you, you have not adjusted these values in these many years, we're going to come do it for you. So we don't want that. We try to make sure we're within the reason of that many years to look at those homes and those properties. So we do have then what we have, this is our LEA is your land economic area. It's a valuation narrative that we keep track of our areas, how many parcels are in it, how many sales were in there. This is a commercial area that we know there's not a lot of sales in specific commercial areas. Commercials are much, much harder. We do end up having to go back anywhere between 3 years and have to see how far out we need to grab different neighborhoods to put the specific sale in with other areas. Our neighborhoods are the same way. Do we have that, one sale, do we have that in a good neighborhood matched with the other sales that have happened in the years past? And we do this every year. So after that is all said and done for, since January, we start around January, we end this in March. We go through April and our notice of assessments are compiled. They're mailed every year in April. The state statute says we have to have them mailed by the 4th Monday of April. There is instructions on there of how to appeal, your date mailed, your account numbers, your land and improvement values. When you see improvements, that does not mean you improved your property. That strictly means it is an improvement to the land. You have your land value and you have your improvement value because you improved the land. So you have your fair market value. Your level of assessment is, we don't tax 100% of the property value. We tax 9.5% on residential and commercial. We tax 11.5% on industrial properties. So when you see assessed valuation, that is only 9.5% of your total valuation. Is
that a state recommendation or a county?
No, so those level of assessments are set by the state. And to my knowledge, they've been that way for years. Now, there's a current bill and legislation looking at lowering the level of assessment, I believe on just residential to 8.3, and that's obviously just to give a tax break to the property owners. But yeah, that level of assessment comes from the Department of Revenue as well.
Thank you.
So then it helps you see your comparison from last year to your current year. And then the taxpayers do have 30 days from the date of mail to appeal. What we call our appeal process is we want you to call, come in, email, whatever it might take. Let's go over this property. Let's make sure we have everything correct, down to the ownership, down to the acreage. Then let's get into the characteristics of the buildings. Do we have them correct? And we want to make sure that everyone understands, based off of that fair market value, it is based off of the year prior sales, and it is based off that replacement cost new less depreciation.
Hey, Erin, there's another question there that I think's worth taking right now.
Okay. Would that mean that if a sale happens in an area that is on the edge of the county that has not seen a sale in, say, 20 years, does that property sale get grouped with a geographically remote location from the actual property? So our areas are grouped now, and we map them out accordingly. And if we have one sale in that area and you say, 20 years, it wouldn't just be that sale that would make market values go up. If there is not enough sales in that area, then we do have to move them around to put them with a different area that would fit better. Does that area inquire, does it have ag land? Does it just have residential? Is it in a subdivision, or is it just township and range? We have to take all those into consideration before we do move them. And again, we would need the minimum of 5 sales before we start, raising or lowering market values. Hopefully that helped you, answered your question. So we do
Yes, thank you.
have you're welcome. We do have a tax calculator on our website. So once the market values are set, what we just talked about, the assessed value rate for residential and commercial is 9.5, industrial is 11.5. The estimated tax amount is based on the location of the property using the most recent mill levy. So right now, 2024 values are going to be set, and we're going to estimate using 2023 mill levies. We only have the county, the city, and the town of Wright listed on that tax calculator because it is a lot of background information that our IT department for the county has to make it work. And so we just chose the main 3. Let's say you're in like Champion Ventures, Antelope Valley, those different areas that may have different mill levies, or they have a special district amount assessed on their property. That is not going to be included in this tax calculator. This is strictly just a base based off of like our formula that's an example there for $250,000 fair market value. 9.5% is taxable, which is also known as assessed value, which would be the $23,750. We take that assessed value, multiply it by the mill levy, and in 2022 it was the 70.553, and that was an estimated of 1,676 annual taxes. When the values are estimated and we increase the taxes, we have to stress when you guys, realtors call, title companies call, it's estimated and it will change every year. Your market values go up and down, your mill levies go up and down.
And one thing that's very important that I would add to that, I guess, is you need to ask if there is a special assessment in that area, because that can make a difference. If you quote your buyer a certain dollar amount, tax amount, that's kind of what they're basing their payments around, and then all of a sudden they get a special assessment amount that adds to that, and that's a huge shocker. So we stress that when people call on properties or want property profiles or taxes or value or anything, is there a special assessment associated with that particular property?
Well, the nice thing about your website that you all have is you can find that in there. You just got to look for it.
Yep, that is correct.
So there are a few things that we have had in this about tax relief. I don't know how many people are aware that tax exemption for tax relief, we do have a veterans exemption and we do have a mineral exemption. So the one is the veterans exemption on real property or licensed plates for those veterans and veterans' widows that qualify under the state statutes. We did include those qualifications. Again, if you're not sure or if you know of someone at a closing, the first qualified recommendation is you have to be a Wyoming resident for at least a minimum of 3 years. Again, that state statute, it comes, from above us. We don't make those rules. All we can do is try to present them to everyone that they know. We can sign you up now. We'll put a flag on your card, and when you do become a Wyoming resident of those 3 years, we will send you a reminder letter to get you signed up for some kind of tax relief. It could save the veteran on homes up to $200 a year on taxes. That's, you know, your upper valued homes. If you just have a single wide or, you know, something smaller, of course, it's gonna be much, much less. We may be able to put the exemption on motor vehicle as well, and that's why we put that in there. The other is an acreage exemption for landowners with liquid or hard minerals that qualify as well with the Department of Revenue rules. This is something that it has to be a producing well as of January 1st. And we do have a form to be completed on there. The exemption will follow the property owner as long as the well is producing as of January 1st. And that does change every year, especially with what we've had go on with the methane and oil and gas fields. As you know, everyone is aware, it's an ever, you know, changing. We might have someone that has the same wells, you know, for 10 years, and then all of a sudden, boom, it's not producing anymore. Why did my land value go up? Why did my taxes go up? It's because they no longer qualify for that mineral exemption. Is that for veterans or disabled veterans alike? Are there differences? There is a couple things. So let me go to the next slide here. That you must be the Wyoming resident for at least 3 years, like I had stated. You have to have been an honorably discharged veteran or a widow. With your copy of your DD 214 or your spouse's DD 214, you have to qualify according to the metals or the dates, or you can be a disabled veteran with a minimum of 10%. It has to be a service-connected disability, though. It can't just be a different disability. And that documentation is requested at the time that you sign up as well. There is a couple different pages on that that gives the dates, gives the metals. That really has not changed much in the last few years. But again, you know, to find out if that homeowner, property owner does qualify, just send them in or have them call, and we can see if they do qualify or not. There's a few other notes on the mineral exemption as well. Per state law, you only qualify for one exemption on each 40 acres, regardless of the number of wells. So if you have 2 wells on one 40-acre section, only 40 acres will qualify. You don't get a double exemption there. You're only going to get the one exemption. So then we go into, of course, this was an old sheet, but it's the same. We just, you know, adjust it accordingly every year. This is where your mill levies are going with your tax dollar amounts. Of course, you know, with the schools, cemetery, weed and pest, hospital, and then the newest one at the very bottom is the college foundation program.
Is everybody listed on that gets their hand in the pot, or is that just the top tier?
That is everyone.
That's everyone with the exception of those special districts that might be in there as well. And that's only if you're in an area that has one.
Where would road and bridge fall under?
So road and bridge is actually under the general county fund, the 11.225.
Gotcha.
Or 235, yeah.
So
Yeah, there are several departments under that general county levy.
I really appreciate you throwing in that slide. That's really interesting because the college has caught some flack since separating from Sheridan County. And, really they're at towards the bottom end of all this compared to some of these other entities. So I appreciate you
Yeah.
sharing that. I think that's enlightening information. Doesn't matter what side of the political line you're on, the facts are the facts, and you got them right here.
Yeah. I commend the college for doing what they've done and being able to operate under what they have done the past 2 years, because they have the ability to go to 4 mills. And they can actually go beyond that with a vote. But they've kept it under that to obviously help the taxpayer not go straight to 4 mills. They've done about half that or whatever. But I commend on them on what they've done so far.
Well, I'm a bit of a capitalist, and they're you got them at 11 mil, and then you look at and here's a little bit. College kids, bring in some economy, right? Like they spend money that is from outside of our area. And
Yep.
and then you look at like the school district, and they're, 10 times more or better. I'm not good at fast math on these webinars, but that's a sizable difference, right? So
It is.
I really appreciate, I just want to say thank you for sharing that slide. That's super cool.
So then that's also broke down on your Campbell County tax bill. This obviously comes from the treasurer's office, and they are generated every year around September. This is after the mill levy is set by the county, approved by the state, and the additional information on those mill levies and how those taxes are collected can be obtained from the treasurer's office. And it's what we just kind of went over on the previous slide, where it says tax authority in the middle, has Campbell County government. That is your same general county levy. And it's broke down to hospital, all the different schools that are listed. And then, of course, the college is the college foundation on there. But this tax bill then is the owner as of January 1st again. This strictly is because of what we like to go back to again is, it's our fiscal year. It's our year. It's our assessment date is as of January 1st. So we're billing in the rears. You're not getting that tax bill till September. If you sold that property within that time frame, we always refer those people back to the title company or the bank or whoever did your closing, because you need to find out who paid what on what taxes, who estimated them, and we don't look at those closing statements. We are not privy to them. We do not know, did the money get collected from the seller? Was it given to the buyer as a check? Is the title company gonna pay those? We do not have that information. We are strictly, we send the numbers to the treasurer. She mails out the tax bills. In the past, she has tried to send as many as she can to the new owners. So we do have a separate file that's called the new owner file that we also try to send a duplicate copy to them as well. That has been, fallen through the cracks. Well, we have people that already move, that their address has changed, or they didn't give the correct address on their statement of consideration. So then in turn, we don't have the correct information. It doesn't happen very often, but that's why, a second copy is generated. Again, if those taxes don't get paid, it does start to fall back on the original owner as of January 1st. They start there. But then if they see there is a new owner, then they reach out to the new owner as much as they can to find out, why aren't these taxes getting paid? So then in that special district assessment, like we had talked earlier, this is also online. I apologize, I don't have it in this slide, but I can email you the link from our website. Each district The assessor does not raise, those property taxes values in order to increase those taxes, sorry. The cost of providing public service determines your property tax. These can include, but are not limited to, the libraries, the fire districts, the roads. In addition, then there is also water and sewer districts. And those are separate from improvement and service districts. They may attach a dollar amount to help pay for those specific projects that they have produced among themselves. This amount is attached only to the property to that specific district, so we have to keep track of that in our system. The assessor sets the levy rates based on the taxing district budget requests, the statutory limits, and property values. The levy rates are expressed in dollars per $1,000 of assessed value. We do not have the information on what the money is used for and why and how long. You will have to reach out to that special district yourself. Or we send them, we do have a contact sheet. Of course, Helen and Kathy does take care of a lot of that in our county, and she is the person to contact for majority of those special districts. But we have a contact sheet for the remainder of them that you will have to reach out to them and find out what they're using that money for and why.
Well, doesn't some of that communication go through the elections office for service improvement districts?
Yes, that is correct. So when somebody forms or wants to form an INS or water and sewer, they have to go through the elections like you're talking about, Jason, and go through a process of being approved through the commissioners. And once that's approved, then they send some information to the Department of Revenue as well, some maps on the boundary to make sure they're within the guidelines on the boundary, and the boundary is within their legal description. But yeah, there's a process to go through to get all that approved.
Yeah, thank you.
You bet.
So on your questions, of the appraisal process, why does Wyoming use mass appraisal? The process of valuing a universe of properties as of a given date, which ours is January 1st, using those standards, methodologies, employing common data, and allowing for statistical testing. Because we are mass appraisal, we are not fee appraisal, which comes to the next question. Why is it different? Because a fee appraisal is a specific date, and it's typically done for those financial purposes. Our mass appraisal is done annually, and we're using the year prior sales. We have to have that cutoff date as of January 1st, and we have to use everything that we had combined into that year with, like, everything I've talked about in the neighborhoods and the LEAs, and all of that is done by mass appraising those properties. Yes, we will review individual fee appraisals. What we do is we want to compare what our comparables are to what the fee appraisal used. Was it the same comps? What kind of properties were used? Were they in foreclosure? Were they on the open market? Did they have things happen, to the actual property as they were being listed? All those characteristics, we like to match ours. We will look at them to find out why we are so different, because we want, of course, again, accurate information on that level. We did have this question. We have it happen a lot. Where else can I go for an estimate of fair market value? Your local realtors, is where we send people with phone calls that want to know, okay, where did you get your value and why is my realtor different? Typically, it's because realtors, just like your finance and your fee appraiser are as of today. You're looking at wanting, to sell that property, and why is our valuation so much different? we will go back in, we will look at that property again and find out, you know, what are we different? What is our differences? And what can we compare it to other properties that have sold in order to find any issues that we have that arise. We also, you know, have, you know, with that homeowner's insurance values that tend to be similar or have the same increase as our office is because they do go off of that replacement cost new, less depreciation. So on our online, oh, go ahead.
I'm gonna jump in there, Erin, a second.
Yeah.
For folks that are watching and don't know entirely, Wyoming is a non-disclosure state, so sales do not get disclosed publicly. That's what makes what Erin's kind of saying here makes their job a little bit challenging, right? Like the sale price of a property isn't going to get recorded at the courthouse along with the deed, where a lot of other, you know, a good majority of the states in the union are that way. Wyoming is different, being the non-disclosure. So getting the sale prices and getting fresh data becomes a little bit more difficult.
Yeah, so I apologize. I just kind of, I guess, didn't know your audience and who who
Yeah.
knew that Wyoming, you know, was a yes, Wyoming is a non-disclosure state. Once you fill out that statement of consideration and it is filed at the clerk's office with the deed, it goes straight to our office. Nobody else sees it except for us and our confidential files. We have, you know, several things that we use off of it. Of course, obviously with calling. And that's why when we do call, we have to verify, because what you did at your closing, again, we weren't there. We don't know if all that information was accurately put on there, because human errors happen. And we've had it happen quite often that we've had to change the sales price. We've had to change a date. We've had to change, no, this actually includes buildings, not just land. It actually included personal property. You know, all those things, that those boxes that don't get checked, because it is such a repetition for these title companies to continuously go through every day. When those things are missed, they throw off our analysis as well. But if we're not asking, you know, the information that is on that statement of consideration, we don't know. Again, we're estimating. We're trying to take the best information that's available, and if we don't get those answers, you know, we're just guessing. So in our online property search, I hope, you know, you guys are all very aware of it. We do have our disclaimers, and what it's just, you know, we're throwing this information out at the public, but we want you guys to know that, you know, we make errors too. If there was something out there that we don't have correctly disclosed to us, we need to know about it so we can get it fixed. So when you start and you do your search, it is kind of finicky. So I just try to include some useful steps for going through that property search. We have a great mapping department. You know, if there's anything that has questions on an acreage, we are not surveyors, we are not lawyers, we cannot disclose exact measurements and information, but we are here to help. We want to get you started on where we need to go. Why do we have, you know, different information from what you think you should have? This is the new owner tab that I mentioned earlier. This is where, like I had said earlier, depending on the status of our office with picking up that statement of consideration with the deed, entering that new owner for the next tax year, they're usually kept up to date within a few weeks. If they're typically in a subdivision, township and range with meets and bounds, they do take longer, especially if there's a split going to a new owner. If there's errors on the deeds with the name, legal description, or et cetera, they will not be up to date because we have to wait for corrective deeds or some kind of affidavits to fix those problems. So a lot of problems that we, go ahead.
Erin, we're at, some of you brought up a bit ago, and I'm kind of curious about if somebody has, like they did the VA exception, is that reflected online, or is the assessed value is what you post online, but the actual amount that they're paying is less and we don't see that?
On the front screen, on that property search, there will be right in here, I don't know if you can see it, where it says current property tax valuations. You're gonna have your market value of your land and your improvements, of course, is your buildings. And then your taxable is 9.5% of that total value. If there is a veterans exemption applied, it will have a $3,000 amount there. And that is working towards that decreasing of the assessed value. So it'll decrease the taxable value by $3,000 in order to get your new total that is then multiplied by the mill levy to get your new taxes after it's applied. I do not have an example on my screen here, but you will see it on the website if they have one applied.
And it's broke out separately, like I don't have to do the math to see the $3,000.
It'll show on there where it says land improvements, personal exempt, and then state and total. It'll show under that exempt.
Oh,
line.
I see. I can, oh, okay, I see it now, sorry.
You know, it's kind of fine print.
Thank you.
So, just a kind of a conclusion, you know, the public belief is that our office has no right or business to be on their private property. Taxpayers end up reporting to our office to the local authorities as trespassers. We don't want to make anyone angry or dismayed or totally uncomfortable of being on your property. We are there strictly, we have a job to do to make sure that we have the property assessed by land, by buildings, and that our characteristics are as close as possible. When we knock on the door first, no one's home, we do leave a door hanger. If there is a doorbell ringer or kids at home, we have backed off the property and left a note for that taxpayer or that property owner to call us, to schedule an appointment. We feel, you know, the need to make sure that we don't want you to feel uncomfortable that we're there. We do try to post on our website. We advertise in the paper, on the county website. We mail out postcards to homeowners in the areas that will be visited with the upcoming year. We cannot contact each individual every year. We don't have the means to do that before we come to your house. We take a section of the county every year and we do a quarter of it, and we come in, we grab paperwork, and we're out for the day. If there is something very, very specific and we need to schedule a meeting, we will. You know, we need to have that communication, and we are more than willing to set up schedule an appointment with that property owner. If anybody has any questions or comments, now's the time. We do have our office phone numbers here and our emails and our website.
Does anybody watching have any questions? You can unmute yourself if you want to. You're more than welcome to engage.
Hi, so this is Anthony and Danny. I feel like we're just kind of a one-person show here. We're asking questions, but I do have another question. And that would be looking up the properties, and I see the taxable value. Is that what is actually taxed, or is that what the taxes are based off of?
So taxable value is also the same terminology as assessed value, and that is the 9.5% of the total market value. So that's what your taxes are based off of. You're going to take that assessed value or taxable value, and you're going to multiply it by the mill levy.
Great, thank you.
You're welcome.
There was a question on the chat. Back on the veterans, it says, is that for veterans and disabled veterans alike, or are there differences?
I had mentioned it is for disabled veterans. It has to be a minimum of 10%, and it has to be a service-connected disability.
But I'm sorry, so if you have a veteran, they can get exemption if they've been there for 3 years. Is that, do the disabled veterans have to be there 3 years as well, or are they,
Yes.
you know, does that fall in a different category?
No, they all have to have the minimum of the 3 years residency first.
Okay.
Hold on.
I would like.
I got.
Oh, okay. Sorry.
Is there anybody else live that has questions? Because I did have some folks that couldn't attend the webinar today that did email in some questions, and I promised that I would get them answered.
All right, we're ready.
Okay, so the first one, and I'm just going to give them to you. You know, some of this we've already kind of covered, but I'll let you recover it. Why are taxes as high as they are? Roads don't show being maintained. They have concerns.
So taxes, we can't answer that completely. What we can answer is property valuation, and why it has risen is because of building cost inflation, and of course because of markets, and the sales have gone up. And why roads are the way they are and why our taxes have increased, when you see those property valuations and how much more people have paid for properties, you're going to have that on those years as higher taxes. On the years that the market values are dropping, your property taxes go down. You know, this is a roller coaster that we've been on for several years now, but unfortunately, we can't answer why, you know, your specific roads or why they're not being maintained. That's, you know, a question for those departments that we can't answer.
Now that's if it's obviously a county road, it's going to be the road and bridge. If it's a state maintained road, then that would be something somebody you'd want to talk to at Cheyenne at the state level.
And city for the particular
Correct.
city.
Yep, you are correct.
I will interject here too, as far as valuations going up and down. I did a YouTube video here about a month ago, 45 days ago, and I did show where valuations did go down 2017 and 2018. So for those watching and you want verification of this, I actually used my own property, one of my properties that I own, and that was a direct reflection of the economic downturn that we experienced in 2016 and 2017. And it really kind of demonstrated how, my opinion, how the assessor's office can be a year or two lagging behind on real values, right? Like we, as realtors, we were going through the storm in 16 and 17, but it really didn't show up in the taxes or our assessed values, right, until 17 and 18. Would you agree with that, Troy?
Absolutely. So it goes back to what Erin's talking about. So the sales that we saw in 2023 affect the market value in 2024. So we're always in the rears. So you are correct. There is a little bit of lag time there.
Well, for those that are curious about that, if you need the link, I'll just leave me a chat somewhere here. I'll send you the link to that YouTube video because we, as realtors, we get that conversation all the time. And I've seen it go down. I've sat at closing tables and I've seen, closing agents that didn't even realize taxes or valuations had gone down during that point in time. And then they slowly kind of crept back up, right? And so I just did a whole YouTube video on it. And I felt like it was pretty informative, but I could have a biased opinion. Who knows?
We'll check it out and let you know.
Yeah, grade me on it, would you?
We'll
Next one, it says, let's say you want to build a shed and you live out of town. So in the county, what is the process? Please go step by step on what you expect the homeowner to do in Campbell County so that you know who to contact, when, and how much the assessed value of, in this example, the new shed was going to be.
Okay, so first and foremost, if somebody's gonna put up a shed, an outbuilding, things like that, I always encourage them to, of course, if it's out in the county, stop by the county building and planning here in the courthouse. Obviously, if it's in the city planning. And then once you've done that, you can come over to our office with those dimensions. Is it going to be insulated? Will it have concrete? Is it going to have water? That sort of thing. And we can kind of give them an idea of what it's going to raise their value and possibly what the taxes would be. So that's something we're always willing to help those folks out with if they just stop in and visit with us.
Well, let's swing the pendulum the other way. What if they ignore your office? What happens then?
Well, that's why we do our 4-year review. We'll pick that up when we review their property.
How do you handle those situations? Like, is there a process, or what's that picture kind of look like?
Yeah, so nowadays, we didn't used to, but now we always get permits. Like if somebody does come in and get a permit, we'll receive that from the city or county. But I'm sorry.
We have a property card that we use when we go to your property. So it tells us what is being assessed on your property. So at that point, if we don't see the shed on your property card, then we, at that time, after we knock on the door, and if you're home, we will talk to you and we'll get the size and the picture and everything that we need to be picking up. If you're not home, we leave a door tag, we'll measure it and take a picture and add it on. And it always gets added on to the next tax year.
And I might add on to that. So let's say that we were at your property this year, okay? And right shortly after we're there, you put up a building and you didn't get a permit. The next 4 years when we're there again and we find out it had been there 4 years, statute gives us the authority to go back as far as 5 years and put something on. Now I can tell you that's not something that we typically do in this office. We pick it up, we put it on for the next year, and we go on. But there is a statute that you can, once you discover property, you can go back as many as 5 years and put that back on the tax roll.
Wow, that's interesting. I never knew that.
Yeah, we don't.
Oh, go ahead.
We don't practice that here much.
Unless somebody's abusing it, right?
Hell no, we don't. We're not biased that way.
Okay, next question. How often do you go around? Oh, we already covered that. That's every 4 to 6 years. Are we charged for concrete pads versus building must be a stick built or a red rock? Are we charged for concrete pads versus like a red rock pad, so a gravel pad?
Yeah, so again, if they're home, we'll ask, is it dirt or gravel floor, or does it have concrete? Then yes, it is assessed differently because your concrete does add more value to the building.
It goes on, okay, so that was part one of that question or statement. The next is concrete sidewalks or pads. What size will they be assessed on?
We do not assess sidewalks and driveways, we only assess if it's extra concrete, as far as like a parking pad for a camper or extra vehicles, or if you have a, big swimming pool in the back and you have extra concrete around for a patio, all that is assessed. But an actual sidewalk and driveways are not assessed in our county.
And actually, we go from 4x4 up.
Oh, gotcha.
Yeah, if it's just like a landing pad, when you walk out your door and it's just your steps or it's just a deck, we're not assessing that. It's, that's just your landing pad to get in the building, into the structure.
Hmm. Yeah, that's interesting. That was a good question. Also, what is the difference between a shed that is movable and one that is permanently tied down when it comes to assessed value?
So we had a mandate from the state, probably 20 plus years ago, kind of when the methane was hot and heavy and they were building the structures out in the methane field that, were obviously buildings that would last 30, 40, 50 years. And then we'd see those same buildings show up on people's property, whatnot. But we had a mandate from the state that, several years ago, that anything that was on skids, movable, is taxable. So we've had to go by that mandate since.
But I guess I get that comment a lot about permanent versus, it can be removed within 30 minutes. So knowing that that's not a county thing, that's a statewide issue.
It is. They consider it an improvement to the land, just like a house or a garage or anything else. It's another improvement.
If you have like your 3-sided loafing shed, of course, we're not taxing for the floor or the front side. We're only taxing you for the 3 sides and the roof. Again, if you have a shed, it's on skids, you move it around, we're only charging you as a separate structure, as a portable shed that has a board floor. If you make it elaborate and put electricity and plumbing and, a man cave type situation in there, then yes, we have to assess that accordingly as well. But if it's just, your typical shed, 9.5% of that value on a typical 10 by 12 shed, you're looking at maybe $10 to $20 a year, just depending on the year of the house.
Mm-hmm.
So that would make it a mobile man cave, right? I thought we called those RVs.
You go, right? Take it to your friend's house with.
Well, I'm glad you mentioned that, you guys, because I think, a good lot of, it doesn't matter what year we're in, there's good lot of complaints about a shed versus something that's permanently tied to the ground or fixed to the ground. And, those conversations, it sounds like to me, need to be taken up with our representatives that are working for us down at the state level, not here at the local level. Is that a fair statement?
Yeah, and
I would say so, yes.
And we assess accordingly. If you have a building that is, we know every building can initially be moved. You know that. A house,
Yeah.
a building, anything can be moved. But we assess accordingly. Does it have that concrete floor? Is it metal frame? Is it wood frame? Does it have electricity? All those characteristics, are taken into consideration. If it's moved from one property to the next, we do our best to move it when the property moves, if that building moves. But if we don't know and we don't find out till our next 4-year rotation, then we do, of course, that's when we do our best to assess it accordingly, where it's at, what is it, what's it being used for, what's its highest and best use.
Sure. How long has this mandate been in effect?
I would have to take a look at the actual date on it. It runs in my mind 2003 maybe. Do you remember? I could look back in my files and actually give you a date, but for some reason 2002 or 2003 sticks in my mind.
So it isn't something that was in the last 3 or 4 years. It's been a
Oh,
couple
no.
decades.
No, it's been here almost as long as me, and that's been a long time, so.
Next question. This person's considering attaching their house to their shop. Is that?
So it depends on what type of attachment you're using. If you're using a enclosed solid wall, finished like the house, or is it just an open bare area, concrete floor, walls in between the two buildings? We would just call it like an enclosed porch. Or is it finished like the house with drywall, or some type of finish on the walls and the ceiling, electricity? Is there flooring? Is there heating? All that would have to be the characteristics we would need to know.
Sure. This one, it talks about assessed values based on building materials such as a steel roof versus asphalt, steel siding versus smart board. Do you see much of a difference there?
Not a huge. We try to assess it accordingly again. If we have the correct information, is it a metal roof? Does it have metal siding? There's not a huge difference in cost.
But you do take it into consideration.
Yes.
Next question, what do you expect for Campbell County for 2024 in the coming years? Huge hikes in assessed values or a small climb, and what determines how that changes?
Well, there again, I think, if I'm not mistaken, we're starting to see building costs maybe decline a little bit. That's certainly gonna help. We're still seeing sales, and we look at every one of them. Trust me, every sale in the county comes across our desk. So Erin and I both look at those, and I'll be honest with you, towards the end of last year, it kind of looked like things were starting to slow down a little bit. We're seeing some lower values. But here recently, it's like, oh my goodness, here we go again. And so that's kind of a hard thing to determine. I personally, now this is just me, I personally see it, I guess, plateauing or slowing down within this next year. Personally, I do. I guess time will tell. We'll know by the end of the year. But that's just from what I'm seeing. I kind of think things are probably going to slow down a little bit again.
As far as this is capitalized in this statement, the huge hikes. Really, that just goes back to, we got the assessed value, we got the mill levies, and we have state statute saying you can only be, what was it, 9.5 to 11.5%, depending on the property type.
Well, you have to be within 5 to 10% of 100% of the value. So if we have sales that are showing a neighborhood, has gone up 15%, we're raising everybody's value 15%. It's not just the one sale or the 5 sales, sorry. You have to have that minimum. So if you're not seeing those sales in that area, you may not see that huge increase. But what you will see is the increase in value when your building costs go up. And if we're only seeing that building costs go up like we have the last 3 years, is because of what we have gone through as an economy. And when we see those situations come through, again, we're mandated. We have Department of Revenue rules. We cannot just say, you know what, we cannot raise Campbell County's values 30%. We can't do that. If we do not follow those rules and regulations, they will come in and they will do it for us. And I'm pretty sure the taxpayers of Campbell County do not want to see that.
Yeah, they'll actually come in and equalize the county themselves. And so we have to stay within certain parameters. And going back to the hikes, or however you put it there, Jason, I think that's directly related to, and you saw this as well, the sales, the prices that are being paid for these properties, as well as the building costs. I mean, there's a combination there. And so it's not us saying, well, shoot, we're going to raise this so we can bring in some more taxes this year. We absolutely can't do that. I mean, we've got guidelines that we have to stay within, and that's why the Department of Revenue, in the background behind our scene or behind our program, can pull reports and see what's going on in our county. And so they have a pretty good idea. And if we're out of whack, they're going to call us.
Yeah. Well, I think I'll step out and make an assumption here. I think part of the concern comes from, we're the energy hub of the nation, right? And if coal continues the downward trajectory, what's that mean for our county as a whole? And, at what point does it hinder the homeowner or the landowner? And I don't know that specifically based on the person that sent this question in, but I can speak globally that from some other conversations, I feel like that's where part of that comes from. So I think understanding that, a good lot of your job just is dependent on the free market,
Yeah. Yeah, it certainly is. I mean, the market is definitely something we absolutely have to pay attention to. I mean, what's going on out there. So, and the sales tell us that.
Yep. Are there improvements? This is an interesting question. Are there improvements that you see that don't help the value of your property, or you kind of ignore?
Well, so yeah, sometimes if you plant a tree or throw some rocks down instead of grass, or build a fancy fence or something like that around, obviously, yeah, it looks nice, and we commend them for that, but that's not something we're just gonna jack the value up because it looks cool. I mean, or looks nice,
Well, you were spot on. So that led me into the next one, talking about fences and retaining walls. How are they assessed?
They are not. We do not assess landscaping. The only assessment for commercials would be paving, fencing, lights in parking lots, things of that nature on commercials. But as far as residences, none of the landscaping is assessed.
If you don't mind, if I heard that correctly, so fencing, if we were fencing our property or replacing fencing that had been messed up, that's new fencing is not going to be assessed at a higher value?
No, it is not.
On residential.
Yeah.
Right. Okay. Thank you.
Next one's a little bit long-winded, so give me a second here. This person has experience in another county in another state, and that particular county had a cap. So for retired people, so specifically talking about people that are 50 to 55 years old or older, to combat the rising cost of inflation and the cost of living, there's no exemptions for that, if I've understood all this correctly. Is that true?
Currently, no. So, I don't know if you've been watching the legislation at all during this session. I have, because we've got a ton of bills that reflect on property relief, I guess I'll say, tax relief, that sort of thing. And there are two bills out there that have a 5% cap on them. And so we're just kind of watching those. Though I think that would definitely curb those spikes that people are seeing, because obviously if it would have went up 10%, you're only going to go 5% regardless. And if a property didn't go up 5%, we're not going to jump to 5%. We can't. We got to keep it under wherever it sits. And so that 5% cap is something that, yes, other states use. It's something that's being looked at. I can tell you that some of these bills are moving through the House and the Senate, not at a snail's pace. They're certainly moving along. They're being approved. So I think we're going to see some relief this year. I just don't know what form it's going to be in, to be honest with you. And the thing, so I'll bring up something else here. Currently, besides the veterans exemption and the mineral exemption, there is a refund program through the Department of Revenue that has been in effect for 2 years and is currently being, it looks like it's going to be funded for this year as well. People that qualify for that, I believe it is a certain age. You have to be under a certain, what is it?
It's income,
Yeah, income based, I guess. So what they do, they come in and you can either apply through the Treasurer's Office or the Department of Revenue. You pay all of your taxes, say like for 2023. Once you have this paperwork filled out, you've got your paid tax receipts, you send that into the state by a certain date in June. And a lot of people over the last 2 years have gotten up to 60% of their money back on their taxes. So that's a program that we push heavily in this office.
But they have to pay in full before they can get credit on the backside.
That is correct, yep.
Yeah, that is good to know. That leads me in. You're good at leading me. Thanks for that.
Right.
Next one, talk about, so this one's you and me, Troy. I've spoken to you in the past here this week, getting this webinar set up, and you'd mentioned legislation. As far as you as an elected official and all the other county assessors in the state, kind of walk the audience through a little bit on what it looks like on the legislative side, and what the communication channels look like. Are there expectations? Kind of put us in that mindset a little bit.
Okay, so here about 3 weeks ago, the Assessors Association met in Casper, and between the people that were actually in the room and online, we had all 23 assessors there. That hasn't happened for a while. We walked through those bills. We've actually got a legislative team within our association that is present down in Cheyenne throughout the whole session. We might have 2 or 3 there each week, but we've got people present the whole time, speaking on the bills, letting people know what it could or couldn't do, how it may affect each county, what it's going to do for the taxpayer. And so I can tell you, Jason, that we as an association absolutely support some sort of relief for taxpayers and property owners. In what fashion that's going to get, because it's kind of out of our hands. We can give testimony, but we don't vote on it. And so whatever gets voted in or passed, we're certainly going to do our best to implement that in each one of our counties and offices.
Until you'd mentioned it earlier this week, I'd never really thought about your position and what it meant in the bigger picture, I guess.
Oh, absolutely. What they do directly affects us, so.
Yeah. Well, yeah, it affects all of us for sure.
Right.
And like some of these questions, going back on these questions that we've had throughout the webinar today, little did I know some of this come from the state, not the county, like especially sheds. Like that's always a conversation. Hey, that's personal property, not real estate property, and how do you define the two, and who says we need to be taxing these items, right?
Right.
So that's been super helpful today. I don't know about, I won't speak for everybody on the webinar, but for me personally, I've enjoyed that.
Yeah, so.
Oh, go ahead.
So I'm just going to say, most anything we do in our office is set forth by statutes, regs, or rules. there's not anything that we can really do and out of those guidelines other than make a call on, hey, I think this house is in good or fair condition versus poor. You know, we have to make those calls locally, but really almost 99% of what we do, it has parameters and guidelines around it.
Yeah. And how much of that direction would you say you get from maybe the county commissioners? Like, let's get away from the state for a second and come back locally. Like, what kind of direction do you get there, if any?
Well, so the interactions that I have with county commissioners are, I'm on a local revenue estimating committee, and obviously this time of year we're talking about budgets, so they lean pretty heavily on me as far as what is our total assessed value looking like for 2024. And you know, my door is always open. If they have questions, they're welcome to come in. We actually took this presentation and gave this to the commissioners as well, because they also sit on a local board of equalization. If somebody comes in and appeals their property, we have to go before them first, and then it can possibly go to the state, district, and federal level. But so, you know, we work closely with them on values, what property's doing. I try to apprise them of that each month, what's going on in our office. And so we work very closely with them, but, you know, their three main functions in my office is to set my salary, approve my budget, and hear these appeals.
Interesting. Well, I guess that leads into, and it, like, the entire system is all linked together, right? Like you guys are responsible for assessing valuations. The treasurer is responsible for collecting the monies, right? And
Correct.
then the commissioners, obviously, they're representing the people and you know, trying to govern, you know, take our county into the future and in a sustainable manner, if you will.
Correct.
So yeah, it's all kind of tied together, it seems like.
It truly is. I mean, all offices within this courthouse work closely together. We have to. We need each other. And so that's what makes the whole thing function or work, if you will.
Mm-hmm. Is there, like, with the county treasurer, is there any communication outside of, or things you guys have to discuss outside of, here's the valuations and then they go collect the monies? Like, is there anything else that happens between your two offices?
Yeah, so, oh man, there's a lot of things. I guess the ones that come to mind right offhand is, so we receive notice of valuation changes from the state on minerals monthly, weekly, that sort of thing. So those are something that we put together in our office. We start that process, and then we take it down to the treasurer's office so they can present that. Let's say there's an added roll or maybe a cancellation. They present those to the county commissioners for approval. Maybe there's a rebate that needs to be addressed, and so the county commissioners would approve that for a rebate back to a mineral company or maybe a taxpayer, that sort of thing. But yeah, we're always in constant contact with the clerk and the treasurer for sure.
Mm-hmm.
They also send the phone calls too when they get the tax bills mailed. Of course, if there's the verbiage on there that says improvements, you know, that's the first phone call that we start to get when the tax bills go out, because we need to explain to the taxpayer, it's not about what you improved on your property. That is your assessed value of all of your buildings on your property. And that's a huge, you know, question that we get phone calls of that nature quite a bit after the tax bills go out.
Sure.
And we have to deal with that.
Well, and you know, we send out, as Erin mentioned, we send out the assessment schedules, which is an estimate of taxes and value in April. And a lot of times those people won't look at those. They just throw it on the back counter or desk or whatever. And then the tax bill comes out and they're like, holy cats, we got to get a hold of them and see what's going on here, you know? So we'll get some of that as well, you know, just some follow up on the value and why it may have raised or went down or whatever.
Mm-hmm. Well, you mentioned minerals, like, I might have tunnel vision because I'm a real estate agent, but you know, your guys' job is much broader than just real estate by itself. You have real estate as property, you have real estate in the mineral estate, and then you have, you know, back to the personal property conversation that is, a lot of people don't like, but it's there. And so you guys really have a lot on your table.
Yeah, we've got, there's 11 people in this office, and I can tell you everyone stays busy. You know, we've got a mapping department. Let's say that you own 40 acres and you wanted to subdivide that. You take that down to the clerk's office and record it. Well, we go down there and make copies of that, come back and start that process of actually splitting up that land for that subdivision. Or you bought a place and you recorded it down in the clerk's vault, and we have to go get that information and bring it back here. So we make that name change on the property, as well as the mailing address. So that's what gets to the treasurer so she can send out the tax bill. So yeah, there's a lot going on here.
Wow, that's interesting. It goes from the vault to you to the treasurer. That's an interesting roadmap.
Yep, it is for sure. And there again, that's why we all got to work together. So
Sure. How many parcels, how many just parcels of land, or do you think you got, because you talk about the window from January to April, like this is a big push in your guys' schedule. How many parcels of land do you think you have to attack?
So in a 4-year period, we're out there looking at upwards of 19,000
Per year
and
or
that's
total?
physical. No, total. Yeah.
So
So
divide that by
physically,
4.
we have to go to each one of them. Correct. Yes.
Yeah.
So we do, you know, 3,000 to 5,000 a year, roughly.
Hmm.
So starting in May, we've got teams going out as soon as the weather gets good and nice, and we can get headed out, and we'll do review until the snow flies, or until, you know, we just can't get out anymore. So it's a long process.
Yeah, that's intense. And this is I mean, putting things in perspective, Wyoming's the smallest state in the union. Other county assessors in other areas of the country, that'd be a pretty humped up job.
Well, and see, so the state statute used to be for everyone in the state of Wyoming was 4 years. And you've got Cheyenne and Laramie and some Teton County, some of those places that simply could not get it done. And so they bumped it to 6 years that you can complete a review period, but we stuck to 4 years because we can get it done in 4 years. So
I see. Huh, interesting. Erin, are you a licensed appraiser, like, you know, what I would see on somebody getting a mortgage, or, you know, a commercial appraiser on these real estate sales?
I'm a certified appraiser through the Department of Revenue.
What's that? Can you describe, do you have the ability to describe what that looks like, or what the differences are between somebody like I'm used to working with versus being certified?
You first, have to take certain amount of classes, core classes that are required by the Department of Revenue. Obviously, passing all of them is one of the requirements, but as you continue on with workshops and continuing eds, 30 hours every 2 years, and of course, your gain of knowledge and experience, the longer you work here, the more, experience you have, we can, reflect back to our Marshall and Swift books, other county assessors, the Department of Revenue. Troy and I work hand in hand, but all in all, it comes down to a lot of experience and a lot of hours that you put into of wanting that certification, to be permanently certified, you have to keep that education up to know, the knowledge and the background that you have.
Sure. Yeah, so I had that question, gosh, I was in a meeting about 2 months ago, and I obviously didn't know the answer. I couldn't answer it, but so certified with the Department of Revenue, and yeah, that makes sense now.
Yeah, it's not so IAAO is the International Assessing of Officers, Association of Officers. They are also a membership that you can be part of, because then you have access to additional courses and information from other states, other counties. There's worldwide appraising going on everywhere, as we know, and there are certain areas that are only mass appraisers. There's certain areas that they only have to change their valuations every 2 years. You have to kind of to follow our statewide. State of Wyoming it's across the board. You cross into Colorado, they have several different ways of assessing in different counties.
Well, and I'm glad you mentioned that. So a good lot of what I deal with as a real estate agent is perspective, right? And that's what a large part of what drives any real estate market is anyone and everyone's perspective. And so you mentioned Colorado being different than us. We get that quite a bit, people moving here from out of state. They'll ask what the taxes are, and we tell them, and they think, is that per month? And no, it's per year. And then vice versa, there's the other side of the conversation where people think we're being overtaxed right now. So thank you for mentioning that. Like, different states are different.
Yeah, and we are obviously one of the lowest, states that have the lowest taxes, because
Right.
we don't have, the individual income tax and, federal taxes. Our sales tax, honestly is not high either. But, back to the question with the roads and whatnot, all those different departments make all this community work. And what we try, as our job is to value the property fairly, is because if we're not, then, it does go into the next level of, the Department of Revenue having access and control over that. We want it to be local, so if there is issues, especially with the sales or the sales calls or information we have, we need to work it out individually here locally and get all that, taken care of here, not above us. We want to start here and make sure, do we have everything correct? Do we have, where are we at on market level? Can you
Right.
as realtors help us, as we help you guys?
Right.
If you don't mind me adding an antidote there, one of the things that we like to do in the military is to handle things at the lowest level. We don't like to have people that really don't know forcing us to do things when they don't know what, they're not the ones here on the ground doing whatever. The people out in offices somewhere that's not even relevant to the situation, they don't need to be telling us, what we're doing wrong or right. So it's good to handle things at the lowest level and make sure that you're taking care of the people that you service, which is your neighbors.
Absolutely.
We do have people to answer to above us, but we want to know that, we do have rules and regulations to follow, but we do like to handle everything in-house, before it escalates. What can we do to discuss the issue at hand?
Well, I think that's about going to wrap it up. I went through all the questions and comments that come in prior to. Is there anybody else watching that has anything to add? Not seeing
don't-
any.
Chat, yeah.
Yeah, there wasn't anything new there, so, I'd like to thank everybody for being here today, number one, and number two, thank Troy and Miss Slattery. Just so you know, Erin about didn't make it today. I got wind earlier this week that she was a little ill, so I really appreciate the effort and really appreciate you being here today. And I'm super impressed you didn't lose your voice.
Yeah, I am too.
That
Thank you
makes three of us.
thank you guys very much for the opportunity. Like I said, open communication, it's key, it's best. Any questions, any problems, if we do have a few new hires, if there is an issue, they're just really not answering the question that you have on hand, just ask, to refer to Troy or I. We are trying to do the best we can in training, and they're doing an amazing job, especially with how much we have to handle.
Well, and if anybody has any questions at any time, our door is always open. We encourage people to come in so we can educate, and that's how we all know what's going on. So appreciate the opportunity, Jason, and everybody that chimed in today and had the questions. Those were good questions, and we appreciate it.
Yep, thank you. And if you're watching this later, leave a comment or a text down below, or, contact the assessor's office or myself, and we'll get, I know there was some on here after we got started asking for a copy of the book. So again, if you want a copy of that, I'll print it off and put it in a binder and get it to you. Just need to call or text me or send a message, whatever your preferred type of communication is. And as always, if you're looking to buy or sell real estate, I'm always around and would love to sit down and talk with you or trade, do whatever. Yeah, let's just talk. So anyway, thanks again, everybody, and have a good evening.
Thanks, Jason.
Jason.
You bet.
Bye.